Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. For the next few minutes we are going to be looking at Tesla. Right then, we're going to do as we always do on this channel. We're going to start with our basic analysis first, Elliott wave analysis second. But first, in case you're new here, let's give you a quick rundown of the chart. Right, we're on the weekly time frame in log scale. First thing you can see is the Elliott wave count, which is all the numbers and letters. We're going to talk about that later. Let's just move it off the chart. Right, we have 4 exponential moving averages, 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have a volume profile on the right hand side showing the various peaks and troughs of the buy-sell volume, with the extreme of which being marked by the yellow dashed line, which is a point of control. This is a visible range and therefore adjusts to what we can see on the chart. We have an RSI set to a 10 close with a green 30 level representing oversold conditions and the red 70 level representing overbought. We have a MACD with a 10 for the short-term moving average, 20 for the long, and a 9 to smooth. The 10 is the blue one, the 20 is the orange. Right then. What can we see on the weekly time frame? Well, bit of an indifferent candle for the week. We rallied during the start of the week and we sold off near the end of it, hence why we've got the wick to the top and the wick to the bottom. So we still closed the week inside the body of the previous candle. We did not set a high higher than the previous week with the peak of the candle, the wick of the candle. So we've just been consolidating still. I do believe we're part of a three wave move up. We'll talk about that later. Well, we closed the week below the 10 exponential moving average on the weekly time frame and just above the 20, right in amongst this peak of the volume profile. You can see here, this is the result of all this sideways consolidation we've been doing for a few weeks. Still above the 60, still above the 250, which is miles away, still above the point of control, which we can see here on a visible range. RSI back into neutral territory between 40 and 60. MACD cooling off somewhat. You know, we've got this lighter shade of red bar. We've had a series of dark red bars building in size on the histogram here. We had the bearish crossover of the short-term moving average over the long, but now that bearish momentum does seem to be cooling off a little bit. No sign of a crossover back to bullish momentum yet on the weekly time frame, but the sign of that this initial thrust down is over and we are consolidating in the meantime is how I've interpreted that, and I think it's the price action supports that interpretation. Now on the daily time frame, we came back up to test the 60 exponential moving average, which has been the major moving average of resistance on the daily time frame since we broke through it. So as you can see, we had a move down here to this low, came up, bodied above the 60, wicked through the 60, wicked roughly to the 60, sold off, came back up, wicked through the 60, back, wicked to or bodied to the 60, wicked to the 60, down, fell short of it, down, back and tested it again. So it's obviously is the main source of resistance in terms of moving averages on the daily time frame. Obviously you can see that big peak in the volume profile. This is what all this sideways consolidation and all this noise is about. We can interpret this in our Elliott wave count shortly. Now on the RSI, we can see we're back into neutral territory, having come down to oversold, bounced into neutral, back down out of it, back into it. Not overbought yet. I do think a push into overbought territory, thinking that the price will break through the 60 this time. We keep testing it. I think we're going to push higher, find resistance, and then come down, as I believe this is a 5-wave move down, so a 3-wave move back is what we're expecting before further selling to come in the next few weeks. That's what I'm leaning into. Could be wrong, but that's how I've interpreted the count thus far. Right, the MACD supports a underlying bearish momentum since this swing low here. High to swing low and back up. We can see how we had a crossover of the bullish into bullish momentum, short term over the long term. We've come back, but we had only a small reading during this move down here, only a small reading of bearish momentum, and have skipped back to bullish momentum even with the red close on the Thursday for the shortened week last week, since it's now Easter weekend. So maybe it's possible we've topped here. It would be very peculiar to have set a high, a low, and a lower high and have some form of truncated correction. The alternative would be that this is a diagonal leading down to a 1 and this is a 2, and we should break down violently if that is the case. We can look at that in a moment. I am expecting it to push higher though in the short term. So let's bring up our Elliott wave count. We're going to keep this really simple. Right, this for me is 5 waves down all day. 5 waves down all day impulse wave. Right, no overlap, perfect. 3 is not shorter than the 1 or the 5. 3 is actually the longest in this case. No overlap from the 4 or the 1. This is a perfect impulse wave down. If you can count this as a free wave move, then you are either better at any wave than me, which is a possibility, or you can simply see a zigzag that I can't see. I can see 5 waves down. Alright, so that means there's no way of making a new high. If we've got 5 waves down off the top, we are in a correction until that correction is complete, and we're going to have a 5 wave down, a 3 wave back, and then another 5 down, at least a zigzag, at least, or a flat, depends. But with 5 in the start, like I said, you'd have to have a 3 for it to be a flat. I count 5 waves, so this is going to be a zigzag, 3 wave move lower. We've done wave 1, we're in the second wave, or A, B, C, we're in the B wave, and we've got another thrust down in the C to come. In order to make a new high in the short term, this would have to be counted as 3 waves, and I can't see it. So I'm calling for lower pricing, higher pricing in the short term, and then lower pricing to come. So we're going to go 5 waves down, 3 waves up, and then we're going to go 5 waves down at least. I keep saying at least. Now, why do I keep saying that? Because that's assuming this is 5 waves into an A, 3 waves into a B, 5 waves into a C. This could be 5 waves into a 1. 3 waves into 2, 5 waves into 3, 3 waves into 4, 5 waves into 5, 5 waves into 5, much lower. Okay, and then that would be A, and then we'd have 3 waves up in a B, and then another 5 waves to follow in the C. So that would literally destroy Tesla's price if that's the case. I'm not calling for something that bearish, I'm simply calling for a top of a major wave up here and a 3 wave move lower. Right then, come down to the 2 hour full scale of the chart, see what we can see. So like I said, we either topped in the wave 2 or the wave B here in a simple 3 wave move ABC, and we've already done 1, 2, and now we're coming down into a C. Okay, I don't like that interpretation. I'm not saying it's impossible, I just don't like it, because this here is a big mess. A big mess. Now maybe if you can count a diagonal in here, you're a better man than me, because I can't count it. I see 1, 2, 3, 1, 2, 3, 1, 2, 3 is what I see. Now you could argue there's 5 waves here, but then you've got to make an A and a B out of this noise here, and it's not easy going. This to me looks like a B wave all day. WXY doesn't look impulsive, doesn't look like a diagonal to me. So I don't think we're going to break. I don't think we're going to break down below this low in the meantime. So all I'm waiting for is the completion of 5 waves higher. 1, 2, 3, 4, 5, something like this. I think we've done the wave 1 and the 2. 3, 4, 5 to come. Could end up going through this level. So let's talk about those levels. We've got the 50, which is the blue line here, 50% retracement from the all-time high to the swing low here at 538.17. So from swing high, swing low, we get a 50% retracement at 719.51. We've already tested that with our initial move up off the low and got rejected, came down to make this pivot here. So the next target is the 61.8, which is the yellow line at 761.04. And then we've got wave A to C, 1-to-1 parity, the length of A projected from the B to find the C at 769.49. So we've got a really good selling area here. So you could use, if you get a reaction here at the 61, or if you want to short straight away at the 61, 68, 61.8 to 100% parity, you could use the invalidation point of the count, which is the all-time high, as your stop, but then you are risking 17% if this count is wrong. That's a little steep, far too steep for me. So I don't want to risk 17% on a trade like that. So I'm going to have to. Your only other option, if you don't want to be lazy and go for an easy validation point, is you're just going to have to watch this like a hawk. You really are, because let's say you get 1, 2, 3, 4. The second you come up to the 61, 68 here, you're looking for 5 waves to complete, and you're looking for some kind of reaction. Okay, now in the smallest time frame, it would be 5 down, 3 back with a lower high, right? If you can sit here and watch that or time that, that would be your short. And then all you've got to do is place your stop just beyond the wave A, or just beyond the 61.8, or it depends what you want. I would place it just beyond the wave 1A to B parity. here. So let's say you got in off of a rebound. What would you be risking then? From a 61 to just beyond, you'd be risking just over 1%. That's much more my kind of trade. And now, if as a retracement trader, now if you are wrong and it's going higher, you're out nice and quickly. You get a reaction, it comes down, but then it does this and goes through and takes you out. Fine, you lose your percent, and then you're looking for a closer margin to the all-time high as your invalidation point. I'm not going to complain about that. If we come up to here, and I still think this is a 5 and this counts as a 5-3-5 zigzag and was still valid, then I might be happy considering a larger position, a larger position, and have my stop closer to the all-time high. If we come really far up, I mean, that would be 6%. That's more like it. It's still a little too much, but it's better if you came all the way back up here. But in the meantime, if I want to get short, I'll be looking for completion of 5 waves in a C, of a C, of a B before we start 5 waves down, and I'll be looking to find it somewhere around the 61.8 and 1-to-1 parity. And all I'm doing then is just waiting to see some kind of reaction from these levels, some kind of reaction that looks impulsive, and then I'm going to short it. Ideally, you'd want 5 small waves down on the smaller time frame, 3 waves back to a lower high, and then short it, placing your stop just beyond these levels. Like I said, 1% or so, that's up to you. And then if you're wrong, you're out. If you're right, you've timed it really well. That's how I'm going to try and set it up. If the price comes to me this week, that's what I'm waiting for. I'm just waiting for the price to come up to these levels. If it goes through these levels and we go rocketing up here, then I will consider a short within a smaller percentage of the high, the invalidation point, because let's just have a quick drag down of our Fibonacci here and see what kind of levels we'd be talking about to achieve that. 78.6 is around this little node of volume here. You could wait for a reaction. If we come through the 61.8 and the 100, you could wait for a reaction at the 78.6. Same deal. You get a reaction, you get a small retracement, you go short, and off we go. Set the stop just beyond the 78.6. That would be another one. If we come all the way back up to this node of volume here, which you can see coincides, the peak of which coincides with a 89% retracement, which is a fib retracement right here on this purple line. Well, at that point, you've got an invalidation point as your stop, which is as certain as you can possibly get for for a stop on a trade, and then you'd be within 6% of the highs. It's down to personal risk at that point. I'd honestly be prepared. I think a retracement of a wave 1 or a wave A to a deep B retracement within a few percent of the high, that's a good trade to get short on for me. That would be, I'd be willing to take that risk, because that's how convinced I am this is 5 waves down instead of 3. Alright, so the higher we get up, the better the margin of safety gets. Alright guys, that's what I'm expecting to see. I don't think we're quite complete yet. It is possible, like I said, it is possible that we topped here and we've put in some kind of funky ass diagonal into a 1-2. If that's the case and this is a 1-2, we should accelerate like buggery down here, and then you're going to have to trade the short as a breakout instead. Not something I enjoy doing, but you'd be looking for a invalidation of this low here, or if you're too late to notice it, then an invalidation of the swing low here back at 5.338. You haven't picked up an ideal short position there. You'd be looking for a back test of it, play it as a breakout instead. I don't like it. I don't want to end up having to do that. I want to sell the retracement up here preferably, and then with a nice tight stop around the beyond the 1-to-1 parity would be my pick, unless we get a reaction off the 61.8 and then off we come down. Alright guys, that's how I see Tesla. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like button, let us know what you think in the comment section below if you want to, hit the bell notification icon to remain informed of future video releases.